Hello, welcome back. Mike from Canavan Wealth. It is Tuesday, May 2nd. Time for Mike Reads the Journal. Let's jump into it. Extremely eventful week and extremely eventful morning, kind of yesterday as well. A lot going on in the world. Awful day for the markets. And despite the fact that I have no real good news for you today, markets are still technically up since last time we talked, up about 0.7%. Market came screaming down today, opened down about a half. And by the time I got into the office, was down about 1.5. It was increased to 1.7 down. So, still about even from a month ago. Year to date, still up in the 7% range, 6.7. Yeah. Did surprisingly well through everything. Last week we did particularly well at the end because tech earnings came in and those were good. But everything right now seems to be dominated by what's going on with the banks, as well as the Fed meeting tomorrow. So first article is really, this won't have a link just because it's kind of the Wall Street Journal's kind of news feed, specifically about, the market is kind of big down days like this. The Wall Street Journal often does these kind of news feeds to cover a lot of different topics all at once. But Fed is talking tomorrow about raising rates. We kind of assumed 0.25% was coming. You're going to see with some drops in treasuries and whatnot that it'll be interesting. I think they're still going to raise them, but with what's going on with First Republic and now two more banks, we're just going to have to see tomorrow. If you think, this is bond yields dropping when they're talking about Fed cuts. This is only a 2-month graph, so it's a pretty big drop in rates. Again, what's going on with the banks is probably going to impact that. This is, we're going to talk about the banks in just a minute, but effectively two more banks, PacWest and Western Alliance. I think it's put down here showing, yeah. So this was the drop during the original banking crisis, the start of the banking crisis, and then we see this big drop recently. Two more banks kind of in trouble. And again, we'll talk about when we get to the bank article, which is going to be just next, but may not necessarily be the bank's fault. This is what happens when the banking industry kind of goes through problems like this. And then, oil prices down. This is very, very short-term yields jumping based on some comments from Yellen about the debt ceiling, kind of a separate issue. So, ugly day for the market. It's weird. If we had talked yesterday, it would have been sunshine and roses, even though First Republic failed kind of over the weekend. So let's jump into that. So First Republic got bought over the weekend by JP Morgan. Last week, their earnings came out. They were not good. Stock kind of went into free fall. The Fed actually roused up a couple of different buyers, some smaller ones in JP Morgan. JP Morgan ended up buying them. They froze the stock from sale and are effectively in the process of delisting it. With past things like this, I don't think there's going to be a whole lot for stock investors. JP Morgan is ultimately the one that's going to buy it. This article is largely about the politics of that and how, lots of people in Washington, really on both sides, are concerned that these banks are getting, big banks in the country are getting too big to fail. It's kind of a term that was coined in the 2008 global financial crisis. But at the same time, these big banks provide this great big backstop when we do see banking problems, because, as I've said before, this hasn't been a run on the banks. People are not taking their money out of the banks as a whole. We have not lost faith in banking, just lost faith in smaller banks, right? So when money leaves smaller banks, it goes to the bigger banks. And when banks need to be bought, the bigger banks are the ones that can do it. Now, there were some smaller bidders that wanted to take over a lot of the assets of First Republic. But they ultimately were outbid by JP Morgan. How the rules of this works, this article goes through it in great detail and you're interested. Some people saying there was some wiggle room there. Do you have to take the absolute highest bidder? This is all politics at this point. I think we have to understand that all these people are just people trying to do the best that they can, make the best decisions for the country. So I don't really have any problem with what's going on here. First Republic going under effectively. I wouldn't call it a surprise. I think there was a chance that they would have made it. I think once the earnings report came out and it was as bad as it was, everybody, their deposits probably just sank a lot more, and the bank became in trouble. And these other two banks that we just talked about back here, Western Alliance and the other one, PacWest, probably similar things happening, right? So like once you lose faith, it really doesn't matter whether what you say is true about being fine, right? As long as no one else pulls your money out of the bank, we're going to be fine. But then everyone's like, well, what if people start pulling their money out, and then all of a sudden you get a run on that bank? And they really don't have anything they can do, right? It hasn't necessarily doesn't have anything to do with the bank itself, its management, or anything along those lines. You just get a lot of people that take all their money out, and the bank can't survive. All right, so that's kind of this is just when we thought the banking crisis was kind of at its end, it's far. It looks like it's far from over. I think we're going to have to start watching these two other banks now. If they were to go under, the regional banks are not doing well. So, and then more doom and gloom here. This is kind of a neutral article, to be honest. It's You have to understand kind of the whole world when we start looking at this. But this is talking about the dollar possibly being overvalued by as much as 15%. Meaning we could drop against other major currencies like the euro or something like that by 15%. We're strong. We were really strongly up against it last year, and we've come down a little bit, but we're still in pretty good position against the euro. So it's just talking. This is the line kind of sums it up. The U.S. economy no longer looks so exceptional. Bad news for the dollar. Maybe bad news for the dollar doesn't mean it's necessarily bad for the global economy or even our own economy here, but so it's fallen in value, not surprising. When inflation was as high as it was back in the end of 2022, and the dollar was as strong as it was, which was kind of the peak of its strength, it was really kind of surprising, right? It's really tough to have an inflationary currency that's doing well, but everybody else is going through similar inflation. Now that our inflation is coming back kind of under control, a little bit more, Europe's kind of still facing it. It'll be interesting to see how all of this plays out. It undoubtedly has to do with, kind of recent spending. And by recent, I mean over the last 10 to 14 years, but also just the global kind of economic strength that has gone on over the last little bit. So this is showing the dollar. That dollar index is probably basing it off of a couple of different other currencies, but you can see back in 2008, it kind of bottoms out, and then it grows very well after 2008. And if we put other countries' stock markets and other economic things, the U.S. really came out of the 2008 global financial crisis, in my opinion, smelling like a rose. We did better than most other countries, except maybe China, and certainly better than Europe and a lot of kind of other emerging markets and things like that. And because of that, the dollar did very well through it. Well, everybody's kind of caught up at this point. What's going on with COVID and inflation and banking is certainly worldwide as well. It'll be interesting to see how we ultimately come out of this, but it's really just showing that kind of this exceptional period that the U.S. has experienced for the last 10 to 14 years is showing signs of coming to an end. I think only time is going to tell on this. I don't think we're going to go through some major reversal in the dollar's value, and all of a sudden, it's going to be 50% what the euro is or something along those lines. Because Europe's got its own problems. Although, down here, it's talking about, Europe growth is holding up unexpectedly well, right? We were expecting this big energy crisis from them, and the war in Ukraine and all of that has really not played out the way that we expected it to, much like we're doing probably better than we expected at this point in 2023, where we expected to be in this kind of at least a micro recession. There's really no signs of that. This one is actually an article I planned on covering, but I just kind of didn't run out of time on other times, which is China's economy did unexpectedly well. So these, kind of more recent issues that they've been facing, some of them doing well. They're still having a lot of issues with their real estate and things like that, but China's kind of doing very well. So as the dollar weakens, that is important for global economies. It says it up here, up to 60% of liabilities. So most like futures contracts, loans, things like that, are all 60% of them are in the dollar. So if the dollar is cheaper compared to your home currency, it makes it easier for global growth to process, right? Because it's just cheaper for them to get in and out of those contracts. So that's really it. A lot going on. I think this is you always do this on Tuesday, but tomorrow we'd have a lot more information towards the end of the day if we understood what's going to go on with the Fed. And I think we're still going to see a quarter raise increase because inflation is still probably the big enemy right now. Um, I would be shocked, especially what's going on with the banking industry, if we didn't start to see some pauses in the very near future. So I think the comments coming out of the Fed are going to be more important than the actual rate increase. So I think at this point, they're probably still going to go with a quarter. If they didn't, that'd be very, very telling. That'd be very, very telling that they're pretty concerned. Specifically, literally what's come out in the last few days about the short sellers on PacWest and these kind of other banks that may, we could be right back into this banking crisis in no time. So just going to have to see. Stock market will be very telling tomorrow as well. With Fed and kind of coming off of today. If we see another big red day, we're probably going to go into a little slide here, 5% slide or something like that. If we see a bounce back, this could, by all next week, it could be roses and sunshine again. We'll just have to. Only time will tell. I've said that I don't know how many times on this standard wrap up here. The Social Security seminar is going to be here in just a couple of weeks. You can register for that on canavanwealth.com. Otherwise, I hope this has been informative, and I will talk to you soon.